Hello everyone and welcome to this week's Trade with Precision free newsletter. It's the start of a new week and I'm pretty excited. Last week was a fantastic week for trading both on the index markets and on the Forex markets. There were some fantastic trends and I managed to have a great week, so I'm really looking forward to this week. Now in this video what I want to talk about is actually a video, a free newsletter I put up about 2 weeks ago. It was the 25th of October actually. You can see it here up on your screens, the video. And now in that video I talked about I basically did my market outlook for what I thought was going to happen in the index markets over that week, and I was looking from a higher time frame perspective, from like the weekly, daily, and sort of the 240. And what I've said in that video is that even if you're trading off tick or minute charts, you should have an idea of what's going on those higher time frames. It's going to make you a much better trader. Now we encourage people to write comments about our videos, and we'll do our best to either respond, such as I'm doing now in a video. Otherwise we'll type you a response. Now when I did this video, someone has responded, so I apologize if I pronounce your name incorrectly, but Yakfayu has responded saying, I basically was quite bullish. I said that based on what I was seeing, that I thought most indexes were fairly bullish right now, and that I thought over that week they were to continue up. As it turned out, they more have consolidated sideways for the week, and then last week they continued their trend up. So I wasn't right and I wasn't really wrong. But I'm not saying, when I say I'm bullish on something, I'm not saying I'm definitely long on that market. I'm just saying that I've got a bullish bias about that market. Therefore, I'll be more likely to look for long setups than I would for short setups in a market that I'm bullish on. So the comment here was, interesting analysis, mate, but I disagree completely. Look at the action on the VIX today as well as overall market volume. Markets go down tomorrow without doubt and continue to go down throughout the week. Okay, and that's great. I love people who have differing opinions to me, because if everyone agreed on the direction of the markets wouldn't work. I've got to have someone to sell to. When I'm trying to sell, so someone's got to disagree with me. When I'm selling, someone's buying, and when I'm buying, someone's selling to me. So difference of opinions is fantastic. But the one thing I do want to say with this, and I'll admit that probably neither of us were right. The markets did consolidate sideways. So I'll pull up an actual chart and I'll show you. So it was this day here was it says the 26th on my charts. That's because I'm in Australia. So when the US markets open, it is actually around midnight, so it comes to 26. But that was Monday the 25th in the US, and it pretty much consolidated sideways. It held above this 11,000 level that acted as good resistance, and now as good support. Held above there and then has pushed on. So during that week that I was bullish, it really consolidated. Nothing really happened on a higher time frame. Obviously, if you're trading off tick charts or 1 minute charts, this next day, on the Wednesday, you might have got some good moves down, but it's not what I was saying. When I was doing the video, I was looking at that higher perspective. So, it did consolidate and push sideways. So I wasn't right really, and neither was the person who left the comment. But it was none of us are right, none of us are wrong. But I brought up a good point that I wanted to say, is that when you're looking at a trade, and let's go back to the comment and have a look. You've said here, all this Yakfayu has based their comment on is basically that I can see is the VIX and the overall volume is 2 factors. Now they may have had more factors than that, but I've just mentioned 2. But if I was to trade against the trend, so regardless of who you are, everyone has to agree with me that is been in an uptrend of late. That was definitely in an uptrend. So any short trade you're taking would be a counter trend trade based on those higher time frames. Now, if I was to take any trade whatsoever, regardless if it's counter trend trade or not, I have to look at more than 2 factors. So when I take a counter trend trade, one of my favorite strategies I trade for counter trend trading is what I call an expansion fade trade. We teach that on our Trade with Precision course. Now with the expansion fade trade, what I'm looking for with that is I'm looking for 7 essential factors. So there must be 7 factors lining up before I'll even consider that trade. Now once I've got those 7 lining up, I may do a scan across all the markets and I may find 3 expansion fade trades that meet the 7 essential criteria. Now I won't necessarily want to take all 3 trades. I'll probably want to slim that down and just find out the very best trade to take. Then to do that, what I then do is I apply what I call my bonus factors. Now there's another 12 bonus factors that I look at, and then I compare those 12 bonus factors across all 3 of those setups that met the essential criteria or the essential factors, and I give them a scoring system. And the trade that has the best score, so that meets all the essential factors plus the most bonus factors, that's the one trade I'll take. So if you look at it, really, I'm potentially looking at 19 factors before I take a trade. So just in this instance here, and as I say, I don't know, maybe you were looking at a lot more factors and you just told me 2 of them, the VIX and the volume. But for me, that's not enough, 2 factors. I need to have at least 7 factors before it even passes the most basic test. Then there's another 12 to pass to make it into a good trade. So in total, 19 factors. So I think that's just a really good point that you brought up, and it's a really good lesson for everyone, is that no matter what strategy you're using, you need to sit down and be able to list that out into some sort of a checklist and say, okay, these are the factors that I must have lining up. And I have, for every one of my strategies, I have a checklist. I have it on my wall in front of me. So I know exactly the checklist I need to go through before I take any single trade. That allows me to scan quicker because I'm very focused on what I'm looking for. It allows me to stay disciplined because I know it's right in front of me, exactly every single trade I want. If it doesn't meet one of the essential factors, regardless of how good it looks, I move straight on to the next trade. And that's what we ensure at all the strategies we teach you at Trader Precision, is that you walk away from every single one of our courses with an exact checklist for every single strategy you have, so you know exactly the factors you must be looking for and that must be present for you to take any trade whatsoever. So based on that, thank you for your comments, and please, guys and girls, if you have any comments, please write them, and we're more than happy to do videos on them for you. And that's what we want to do. We want to encourage interaction. So I'll either do a video or I'll do a type response. But that's great. Let's get some comments going, and we can get some discussion happening. So thank you again for your comment there, and hopefully by what I've shown you now, that maybe you've learned something from that, and maybe you can apply that to your own trading. Okay, guys, have a great week trading, and I'll speak to you again soon.